Welcome back to I Am Crypto, where we bring you the most pressing financial news with a dash of wit to keep things lively. Today, we're diving deep into a topic that's been shaking the financial world and causing quite a stir: carry trades and their surprising connection to the recent Bitcoin crash. Stick around as we unravel this financial conundrum. So, what's all the buzz about? On Monday, Bitcoin took a nosedive, shedding 20% of its value in just a week and falling below $50,000 for the first time since February. If you think that's dramatic, wait till you hear what's behind this tumble. Hint: it involves the Japanese yen, a financial strategy called the carry trade, and some pretty jittery traders. First off, let's talk about the Japanese yen. In the past month, the yen's value has surged by 10% against the US dollar. Now, for those of us who aren't currency traders, this might seem like just another number, but in the financial world, it's a big deal. So how did we get here? Enter the carry trade, a popular strategy where traders borrow yen at super low interest rates and invest that money in higher-yielding assets elsewhere, like US dollars or even Bitcoin. For a long time, this trade was like a golden goose. As long as the yen stayed low, traders could rake in profits from the interest rate differential and any gains in their investments. But like all good things, this gravy train came to a screeching halt. Last week, the Bank of Japan decided to shake things up by raising interest rates for the first time in 17 years. Imagine the shockwaves. This move made borrowing yen more expensive, throwing a wrench into the carry trade machine. Jake Ostrovskis, an OTC trader at Wintermute, explained that this sudden change made the yen-based carry trade unattractive. Traders started selling off their risk assets, like equities and cryptocurrencies, and converting back to yen, causing the yen to strengthen even more. It's a bit of a vicious cycle. As the yen strengthens, more traders rush to close their positions, leading to more selling of risk assets and so on. John Wu from Asylum Ventures called it a double whammy on Twitter, X. It's like watching a financial domino effect in action, and believe me, it's not pretty. Greg Magadini, Amber Data's director of derivatives, noted that everyone was on the same side of this trade. When things started to go south, the rush for the exits was immense. Imagine a crowded theater, someone yells fire. And you get the picture. The carry trade breakdown isn't the only player here, though. Magadini also pointed out that US recession fears and geopolitical tensions in the Middle East are adding fuel to this financial fire. Investors are spooked and adopting a risk-off approach, which means they're pulling back from riskier assets like Bitcoin. Bartosz Lipinski, CEO of Cube Exchange, echoed these sentiments. He mentioned that borrowing yen used to be virtually free, allowing traders to dabble in various assets. But with uncertainty in the Middle East and a potential recession in the US, many are now playing it safe. So what's the takeaway here? The yen carry trade's unwinding has been a significant factor in the recent market turmoil, especially for Bitcoin. But it's part of a larger picture where multiple economic factors are colliding, creating a perfect storm of financial instability. Now I know what you're thinking. Why does this all matter to you? Well, if you're invested in crypto or any risk assets, understanding these market dynamics can help you navigate these turbulent times better. Knowledge is power, and staying informed can make a huge difference in your investment strategy. All right, let's wrap this up with a little bit of humor to lighten the mood. Did you hear about the trader who borrowed yen at a low rate and invested in Bitcoin? He thought he was playing it smart, but now he's just yenning for some stability. Okay, maybe leave the jokes to the comedians, but you get the point. If you found this deep dive into the carry trade and Bitcoin crash enlightening, make sure to hit that like button and subscribe for more in-depth analysis. Stay informed, stay invested, and we'll see you in the next video. And remember, always keep an eye on those yen traders. They might just be the canary in the coal mine.